In the last 2 years, we've seen 5.5 million ounces of, let me take that back. 350 million ounces came off of COMEX in the last 2.5 years. 5.5 million ounces of silver were delivered out of COMEX this week. 40 million ounces of gold taken off of COMEX in the last 3 years. 877,000 ounces last week. That's the largest I can remember. So what you're basically seeing, huge amounts of what's called exchange for physical, where contracts are issued on COMEX and delivered in London. The Shanghai Gold Exchange being bled dry.
Renowned precious metals analyst and president of Miles Franklin, Precious Metals, Andy Schectman, has described silver as the world's most undervalued asset. According to Andy, the asset's prices have been artificially kept low by some sophisticated big money investors to advance their yet-to-be fully revealed interests. With the gold-silver ratio now around 89 to 1 ounce of gold, Andy believes the precious metal presents a historically significant opportunity for all categories of investors. Another fact that makes silver particularly attractive to Schectman is the number of big money investors that have flooded the exchanges with demands over the past year. According to the Silver Institute, the total global silver demand posted a record high of 1.24 billion ounces in 2022, an 18% increase compared to the previous year. It eased slightly in 2023, dropping to 1.14 billion ounces, 632 million ounces purely from industrial demand alone. In 2024, the Silver Institute estimates that global silver demand will hit 1.2 billion ounces, which would mark the second highest level on record for the metal. According to Andy, one interesting fact about the increasing silver demand is the category of investors that are loading up on the precious metal: sovereign funds, family offices, and central and commercial banks, all sophisticated investors with enough funds and influence to manipulate prices and enough resources to know things that are hidden from average investors. But there is an endgame in sight, and experts like Andy believe we are much closer to this endgame than ever. When it begins, investors who don't have the age-old trusted insurance that silver and gold present will lose all of their wealth overnight. We will now bring you insightful clips from Schectman's interview with Commodity Culture. Please watch the video to the end so you don't miss any of the priceless information the renowned analyst shares. Also, give this video a thumbs up, subscribe to the channel, and turn on post notifications for more videos.
The COMEX market was designed to offset risk. And like, for example, if I have 5,000 ounces of gold in my warehouse, I want to offset that risk by selling 5,000 ounces of gold on paper on COMEX so that if one goes up, the other goes down commensurate. I'm market neutral to the swings in the price of gold. If I have 5,000 ounces and the price drops $100, I'm out of $500,000. That's not good. But I would be up on the exact same amount on what I sold short on COMEX. That is a covered position and is done to offset risk. It's a hedge. But I asked my head trader, several months ago, what did it cost to control a 100-ounce gold contract? And he said roughly $7,000 in our margin account. The trade is just a couple of bucks. So if I'm a commercial or a central bank that's basically 35 times leverage or thereabouts. So if I have 500 million in my margin account as a commercial or a central bank or a sovereign wealth fund, I in essence control 15 plus billion in contracts. And when you take a look at how, after the CPI, the CPI numbers or the unemployment numbers rather came out the other day, bang, they smacked the crap out of it. Well, that's exactly what they do. They sell short contracts and they overload the market with paper. And when the price is falling on paper, you see massive deliveries coming off of all of the exchanges. They're draining the exchanges. As an example, in the last 2 years, we've seen 5.5 million ounces of, let me take that back. 350 million ounces came off of COMEX in the last 2.5 years. 5.5 million ounces of silver were delivered out of COMEX this week. 40 million ounces of gold taken off of COMEX in the last 3 years. 877,000 ounces last week. That's the largest I can remember. So what you're basically seeing, huge amounts of what's called exchange for physical, where contracts are issued on COMEX and delivered in London. The Shanghai Gold Exchange being bled dry. What you are seeing is using the paper price and the levered paper price to, in essence, drain all of the exchanges. And then now you see Shanghai have list higher prices for gold and silver on Shanghai exchange, where gold is 80, $100 higher than London or on COMEX, and silver is as much as $2.50 higher. So they're incentivizing the traders to make purchases in London and make purchases on COMEX and deliver it to Shanghai. And I wonder how many people even know the fact that the London Metals Exchange, the LBMA, was purchased by the Chinese a few years ago. They own it. And now you have the Chinese saying, but by the way, we want to start trading Shanghai contracts on the LBMA where the price is higher. And by the way, we also want to start warehousing the metals traded on the LBMA in Hong Kong. So think about this for a minute. Do you see a problem here? Do you see how things are slowly being bled dry out of the West? And now what they're doing is they're arbitraging, they're warehousing the metals that on the exchange that they own. No one knows that. It's not called the Chinese Bullion Market Association. It's the London, but they bought it. They own it. So they're draining the exchanges, both the COMEX and the LBMA. They own the LBMA. They're listing Shanghai contracts on the LBMA, or will be soon. And now they want to warehouse metals traded on the LBMA in China, the largest importer and producer of gold in the world. They've bought for 14 straight months in a row. This is a game of chess while we think of checkers, and they are positioning themselves to, in essence, own all of the things that make the world go round, not just gold and silver, but anything, base metals, rare earth metals, and hard and soft commodities across the board. So, yeah, Jesse, they are thinking much more strategically than we are, and we're focused on the wrong things.
Though it has not been fully revealed, the endgame for central banks is the complete collapse of the global monetary system. More precisely, the Western monetary system. The dollar is at the core of the system as the world's reserve currency and has been for decades. However, experts believe an irreversible shift started when the United States, the United Kingdom, and other Western countries announced numerous economic and financial sanctions against Russia in 2022. By doing this, the U.S. government essentially told other countries they could be sanctioned too, and their assets would be immediately frozen. No country will wait until they are in the U.S. bad books before they start taking action. So it is no surprise that 2022 marked a remarkable year for gold and silver in terms of central bank accumulation. They started preparing to remove themselves from the mercy of the U.S. government, and they've been ramping up their efforts since then by buying gold and silver. While Andy appreciates the importance of both precious metals, he strongly believes silver presents a better opportunity for investors because it is so undervalued. Let's get back to the interview.
But when you talk about an asymmetrical risk-reward type of environment, what can I invest in that has the lowest downside risk and the best upside? I don't see a better thing in the world than silver, Jesse. And I try to be objective. I mean, if you're not objective, you're full of crap, and people will bust right through it. I think to myself, I mean, you look at the Silver Institute, who's telling us the supply-demand fundamentals, and they ignore the military-industrial complex. They don't even put that in there. I gave a speech at the VRIC the other day, and you and I were talking about that. Usually that's where we see each other in Vancouver. And 2 years ago, I gave a speech, and I've been saying for a long time that, there's 500 ounces of silver in the tip of a Tomahawk cruise missile. For years, I've been saying that. And last year, not this last one, but the year before, I gave a speech, and a man came up to me and he said, I work as a consultant for the Department of Defense. And he says, I know there's some silver in there. I'm going to check on that. Now, I never heard back from him. I go and gave my speech again this year, and lo and behold, there he was. He had a handful of pictures. He said, everything I'm going to show you is declassified. And he showed me how they tested the Tomahawk cruise missile in the ocean in California on a automated bed about 50 feet under the water, and how they had problems shooting the Tomahawk cruise missile vertically instead of horizontally because of the guidance system and this and that. And he says, yeah, this was my baby. And he says, I got to tell you something. You're right. There's between 14 and 15 kilograms in the tip of a Tomahawk cruise missile, almost exactly 500 ounces. You're spot on. And this is a guy who worked on the Tomahawk cruise missile program. Now, that's just one form of munition. I mean, there's all sorts of high-tech weaponry and missiles and aerospace and stealth fighters. All of these things need copious amounts of silver, yet it's not talked about in the supply-demand fundamentals. And to me, when you see a country like India, Jesse, buy 400 million ounces of silver in the last 2 years, that's almost twice as much as is on COMEX. That's what we know of. this is not lost on a lot of the world. I believe silver should be reclassified not as a industrial metal, which certainly it is in green and digital applications around the globe, but maybe much more than that is a strategic metal where it is needed in things like warfare. And if you look around, all of a sudden, we're currently bombing two countries. We're involved in wars all around the world. And if we're not directly involved in them, it seems as though the companies who manufacture all this stuff in the United States are supplying the wars all around the world. Now, is it too far-fetched to think, or is the line between conspiracy and reality not thin enough to realize that maybe there's something bigger at play here, that the people who are kind of pulling the strings around the world have made a fortune in creating war, and they need silver, period, in order to do it. And this is why I think you're seeing, this is the one thing they did not count on, Jesse, was countries like India standing for delivery, draining the exchanges. And if you look at the amount of silver that's left the COMEX over the last 2.5 years, it's pretty damn close to what India's accumulated. Now, it didn't all come from here, but my point to you is that there are a lot of countries around the world who aren't telling us the silver that they produce and accumulate. And I truly believe, logarithmic decay, that we will wake up one morning as the biggest, smartest money in the world, the most sophisticated, knowing the playbook, knowing where we are, who continues to accumulate these commodities, while the Western markets, which are just ridiculous in their overt manipulation right in your face, are actually falling right into their hands. And when we created this game, these countries were not able to really stand up on their own. Many of them were third world. And now all of a sudden they're industrialized, they're wealthy, and they know the game, and they're finding safety in numbers, and they are accumulating things like silver. So there are very few things on the planet, in my opinion, that offer the potential that silver does. And I try to poke holes in that. It has better upside potential than just about any asset on the planet. It is more undervalued than any asset on the planet. It has as many uses as any asset on the planet, and it's decreasing in nature.
According to the latest report from Watcher Guru, at least 30 countries have declared their interest in joining the BRICS alliance in 2024. Countries from Asia, the Global South, Africa, and even Europe are reportedly considering joining the alliance before the year ends. According to the report, interested applicants will submit their applications later this year, and all applications will be reviewed during the upcoming BRICS summit, which will be held in October 2024 in the Kazan region of Russia. The BRICS has been very vocal in its goal of ending the US dollar's era as the world's sole reserve currency. So, every country that pledges to join wants to protect itself from the eventual collapse of the current monetary system. The spiraling national debt of the United States has been cited as a huge cause of concern among these countries. According to estimates from the Congressional Budget Office, if the federal government continues borrowing at these rates, annual interest payments will double their historical high and eventually surpass Social Security as the single largest line item in the federal budget by 2050. Yet borrowing is all the government can do to service its massive $34 trillion debt. This is why the CBO and Federal Reserve Chairman Jerome Powell have described the country's fiscal path as unsustainable. Please share your thoughts on Andy's interview. Do you think the next era of global economics and geopolitics will be favorable for gold and silver investors? Please drop your comments and observations in the comments section below, hit the like button, and subscribe for more videos. All of these actions help boost the YouTube algorithm so our videos can reach more metals investors. Thanks for the support.